Palantir just reported they're up 13% after hours because they beat on both revenue, reporting 725 million versus 705 million expected, and they conveniently beat yet again by 1 penny on EPS, 10 cents versus 9 cents. Now, if you're new to the channel, the reason I say convenient is because this is one of the issues I have with Palantir. It's a phenomenal company. They're leading the AI race. There's some great things about Palantir, things like they're helping insurance company make decisions in 2 or 3 hours that used to take them 2 weeks by using AI. They're on the forefront of this. They're the leaders so far and wide that I don't even know of a competitor of Palantir. Now, some of you might be wondering, what does Palantir do? Well, their generic response is we take the data you have and we figure out the solutions to the problems that you have. Sounds generic, I get that. But they have been a phenomenally growing company. But they're beating by 1 penny conveniently every single time. Our analyst in-house, Dalton, found some evidence recently of the fact that assets are coming on the books and leaving the books and being marked up just enough to make them beat. Is it spot on where we can sit there and cry foul? Maybe not. I don't know about that. The funny part is their free cash flow is phenomenal. Come check out their free cash flow. Their income statement here by year. Okay, they're making money now, but look at these losses: 580, 1.2 billion, 500 million, 373, 209, and in the last 12 months, 404 million in profit. But look at their free cash flow in that same year-by-year basis. Their losses ended back in 2020. Free cash flow, $700 million last year and $700 million in the last 12 months. So they had the cash flow justify it all. And as you also know, I look at Alex Karp and I sit there and say, he's kind of a cringy guy, getting really mad at the short sellers. And guys, when this stock was being pumped by these YouTubers 3 years ago at $45 a share going into 500, and I said, I think it's worth $5 a share. I'm interested at that point. And it went to $5.90 or something. Now it's back up. It is surging like crazy up to all-time highs now. Finally, all-time highs again of 46.72. Well done. Palantir is a much better company than it was, and even better yet, their balance sheet's incredible. This company has an enterprise value lower than their market cap. Why? Because they have a great balance sheet. They have more cash on hand than total debt. That is awesome. They don't need to do anything else besides become a better and better business. However, selling for 40 times sales is kind of a doozy to me. Yes, a company can grow into that. That alone does not make it expensive. If they have the growth potential behind it, they can absolutely grow into that. But what are analysts saying about this? Look at this EPS growth. Not that much. But again, we're focusing on free cash flow. But the revenue growth doubling in the next 4 or 5 years, okay, not bad. But is that worth 40 times sales to justify that? Guys, if you like this sort of analysis, this is what we do on this channel. You're probably finding us because of Palantir, and I think Palantir is an unbelievable company with amazing potential. I do have my questions about it, but I would be interested in looking at this company further. And a lot of people in our community up here don't agree with me about Palantir. It's just something about a CEO who is incentivized to kind of maybe manipulate the numbers a little bit, and also with his behavior is kind of bizarre. Am I saying there's something wrong for sure? No, but I look at it and get an uneasy feeling inside. However, this company was founded by a guy I very, very, very much respect, Peter Thiel, and how he operates things, founder of PayPal, and I like that guy a lot. So I look at these things and think, okay, is this company have major potential? Does this company have major potential? Absolutely. Do I see a clear-cut way in which they justify today's value? Probably not. But here's some more great information on Palantir. Guys, look at this. The U.S. business is growing faster than the company as a whole, with its revenue up 44% the latest quarter relative to the year before. U.S. commercial revenue was up 54%, while government revenue up 40%. Karp is absolutely right. We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down. This is a U.S.-driven AI revolution that's taken full hold. He's probably right. He's absolutely right. But remember, the internet revolution changed the world back in 2000, but you still saw companies fail. The good news about Palantir is it's probably not going to fail. Why? Great balance sheet, real revenue, real profit, real cash flow. It's probably here for a while. What's also helping drive up the stock Look at this. Palantir anticipates 767 to 771 million in revenue for the fourth quarter, above 745 million consensus view. This is how you drive up a stock price. Now, is this company too expensive? I don't know. Because with these kind of numbers of growth, good for them. You look at this and say every investment's the present value of all future cash flow. If they can grow their cash flow like this continually, this company has a lot of potential. This, I'm not gonna lie, is a weird one for me. This guy is bizarre, but he's probably one of those bizarre geniuses, and it's probably something I just don't understand. Am I interested in Palantir at some price? Absolutely. The question is, what's the right price? And that's what we talk about on our main channel. But for this channel today, right now, what we're talking about is Palantir's earnings results. So guys, here's their release. Palantir reports revenue growth of 30% year over year, US revenue growth of 44%, GAAP EPS of 6 cents, raises full year guidance on revenue. Everything here was awesome. Revenue growth, closed 104 deals over $1 million. And remember, they're also going for smaller deals, which I think is okay. It's going to help grow their revenue. At some point, you've got to sit there and realize as you grow, this is what we talk about Tesla. As you grow, you have to accept lower revenue per deal. You have to accept lower revenue per car. Same thing here. Customer count grew 39% year over year and 6% quarter over quarter. GAAP net income of 144 million, representing a 20% margin. Adjusted income from operations of 276 million, representing a 38% margin. Cash and cash equivalents, $4.6 billion. Cash from operations, 58% margin. Free cash flow, 435 million for the quarter. Guys, they did 700 million in the last 12 months before this quarter. Now they did 435 million. An absolute crush. Every part of this was huge. I mean, let me look for even bad news here. I don't even see bad news. Where can I find bad news? So guys, if you like hearing this stuff, I want you to do two things. We make 3 or 4 videos a week on this channel. We do live streams. Subscribe to this channel to get more earnings releases and economic updates and stock market updates. But more importantly, tomorrow, November 5th, 2 p.m. Eastern time, we're doing a live stream. So make sure you get here for that live stream. There'll be a link in the description below for the live stream. Guys, we react the fastest out of any channel on earnings. Thank you very much. Don't forget to subscribe.